Look, I'm going to be straight with you. What's happening right now in the precious metals market is something most people won't recognize until it's too late. And by then, the opportunity will be gone. Gold just hit $4,120. Silver touched 69.44. These aren't just numbers on a screen. These are alarm bells. And if you've been stacking, if you've been patient, if you've been waiting for validation that you made the right call, this is it. But here's what nobody's talking about. This isn't just a rally. This is the beginning of a fundamental restructuring of how wealth is stored globally. And the evidence is everywhere if you know where to look. Let me show you what I mean. Central banks bought 220 tons of gold in just the third quarter alone. That's a 28% increase from the previous quarter. Think about that. The institutions that print money, that control monetary policy, that have access to every financial instrument imaginable, they're buying physical gold at an accelerating pace. Why? Because they know something. They see something coming that the average person doesn't, and they're positioning themselves accordingly. Now you might be thinking, okay, but central banks have always bought gold. And you'd be right, but not like this. Not at this pace, not with this urgency. Let's go back to what happened in the early 1970s. Nixon closed the gold window in 1971. Suddenly, the dollar wasn't backed by gold anymore. It was just paper, backed by trust and military might. And what happened? Gold went from $35 an ounce to $850 by 1980. That's a 2,300% increase in less than a decade. But here's the thing. Back then, it was just the United States making that decision. Today, we're watching the entire global monetary system shift. Multiple countries are actively working to reduce their dependence on the dollar. The BRICS nations aren't just talking about it anymore. They're doing it. And gold is at the center of that shift. Think about what Russia did after the sanctions. They couldn't use dollars for international trade anymore. So what did they do? They started settling trades in rubles, yuan, and gold. They turned a weapon used against them into an opportunity to break free from dollar dependence. China's been even more strategic. They've been accumulating gold for years, but they don't report it regularly. Every few years they'll announce their reserves, and the number is always shockingly higher than anyone expected. Why the secrecy? Because they don't want to drive the price up before they're done accumulating. But now, something's changed. The accumulation phase is ending. The positioning phase is beginning. And that's why we're seeing these record prices. Silver's story is even more interesting. While gold gets all the attention, silver's been quietly setting up for something massive. It hit an all-time high near $69.44, but here's what makes silver different from gold. Gold is money. It's a store of value. It's what central banks buy. Silver is both money and an industrial metal. It's in your phone, your solar panels, your electric vehicles, your medical equipment. The green energy transition alone is going to require massive amounts of silver. And unlike gold, which gets recycled and stays in the monetary system, silver gets consumed. It gets used up in industrial applications and never comes back. The supply situation for silver is actually more critical than most people realize. We've been running supply deficits for years. The above-ground stockpiles that used to exist, they're gone. The silver that governments used to hold, sold off decades ago. And now, just when industrial demand is exploding, investment demand is coming back too. You know what happened in 2011? Silver hit $49, but that was purely investment-driven. There wasn't the industrial demand we have today. There wasn't the supply deficit we have today. There wasn't the monetary instability we have today. So when people ask me, is silver overvalued at $60? I ask them, compared to what? Compared to the dollar that's being printed into oblivion? Compared to the industrial demand that's only going to increase? Compared to the supply that's not there? Silver at $69 might look expensive until it's at $100. And then $69 will look like the opportunity everyone missed. But let's talk about what's really driving this. Because it's not just about supply and demand. It's not just about central banks. It's about trust, or rather, the loss of it. Every time there's a banking crisis, every time there's a currency crisis, every time there's geopolitical tension, people lose a little more trust in the system. And when trust erodes, people look for alternatives. Gold and silver are the ultimate alternatives. They've been money for 5,000 years. They don't require a government's promise. They don't require a bank's solvency. They don't require anything except their own intrinsic value. And right now, with everything happening in the world, That's exactly what people want. Look at what's happening with trade wars, tariffs going up, supply chains being weaponized, countries choosing sides. This isn't just economic policy. This is the early stages of a new Cold War. And in times like these, gold becomes more than just an investment. It becomes insurance. The World Bank just published data showing that gold, silver, and platinum prices have all soared as investors seek safe assets amid geopolitical tensions and economic uncertainty. But here's what's interesting. They're not just soaring because people are scared. They're soaring because the alternatives are getting worse. Where else are you going to put your money? Bonds yielding negative real returns after inflation, stocks at all-time highs while earnings are declining, real estate that's unaffordable for most people, cryptocurrencies that can drop 50% in a week, or gold and silver, which have maintained purchasing power for millennia? The choice becomes pretty clear when you frame it that way. Now, I want to take a quick aside here because this is important. If you're sitting on $100,000 or more in retirement accounts, you need to understand how gold IRAs work. I put together a free guide that covers exactly how to get physical gold into your retirement account without tax penalties. It's in the description below. Worth checking out if you're thinking about protecting your retirement savings. No pressure, just information. All right, back to where this is headed, because the real question isn't whether gold and silver are going up. They already are. The real question is how high they can go and how fast. Let's look at the technical picture for a second. Gold breaking through $4,400 is significant. That was a major resistance level. Once you break through resistance like that with conviction, it often becomes support, which means pullbacks to that level become buying opportunities, not reasons to panic. Silver, breaking its all-time high, is even more significant because unlike gold, which has been making new highs periodically, silver has been stuck below its 1980 and 2011 peaks for years. Breaking through that ceiling changes the psychology. It tells traders and investors that this isn't just a temporary spike. This is a new trend. And trends, once established, tend to continue much longer than people expect. But here's where it gets really interesting. The paper market versus the physical market. Most of the gold and silver trading happens on the COMEX. It's a futures exchange where contracts are traded. And here's the thing about those contracts. Most of them never result in physical delivery. They're just bets on the price, paper promises. But what happens when people start demanding physical delivery? What happens when the paper market and the physical market diverge? We've already seen hints of this. There have been times when you couldn't buy physical silver at anywhere near the spot price. Premiums were 30%, 40%, even 50% over spot, because the physical metal wasn't available even though the paper price said it should be. That disconnect is going to get worse, because as more people wake up to what's happening, they're going to want the real thing, not a promise, not a contract, not shares in an ETF that may or may not have the metal it claims to have. They're going to want physical gold and silver in their possession. And when that demand hits, when the paper market can't deliver, that's when prices really explode. Think about what happened with nickel on the London Metal Exchange in 2022. Prices went so high so fast that they had to halt trading. They had to cancel trades. They had to change the rules because the system couldn't handle the reality of physical shortage. Now imagine that happening with gold and silver, metals that are far more important to the global financial system, metals that central banks hold, metals that are considered money. The disruption would be unprecedented. And I'm not saying this to scare you. I'm saying this because the signs are all there. The setup is all there. The fundamentals are all there. What's happening right now isn't a bubble. Bubbles happen when prices disconnect from fundamentals. When speculation drives prices beyond any reasonable valuation. This is the opposite. This is prices finally catching up to reality. This is the market recognizing that the monetary system is broken and needs an alternative. Let me give you another historical parallel. In 2008, during the financial crisis, gold initially dropped. People were selling everything to raise cash. But then, as the Fed started printing money, as governments started bailing out banks, as the reality of the situation set in, gold went on a 3-year run from $800 to $1,900. We're in a similar moment now, except the problems are bigger, the debt is higher, the money printing is more extreme, the geopolitical tensions are worse. So if gold went from $800 to $1,900 in that environment, where does it go in this one? Some analysts are calling for $5,000. Some are saying $10,000. Some are even talking about $20,000 or higher. And you know what? None of those numbers are crazy when you consider what's happening. If you adjust the 1980 gold peak of $850 for real inflation, not the government's manipulated CPI numbers, but real inflation in terms of purchasing power, gold should be well over $10,000 today just to match that peak. We're not even close to bubble territory yet. Silver's even more interesting. If you look at the historical gold to silver ratio, it's been around 15.1 for most of history. Right now, it's around 64:1. That means silver is massively undervalued relative to gold. If that ratio reverts to its historical mean, and gold is at $4,400, silver should be around $290, not 69s, $290. Now, I'm not saying it's going to get there tomorrow. Markets don't move in straight lines. There will be pullbacks. There will be volatility. There will be moments of doubt. But the trend is clear. The fundamentals are clear. The setup is clear. And if you've been stacking, if you've been accumulating, if you've been patient while everyone else was chasing tech stocks and meme coins, this is your moment. This is the validation you've been waiting for. But here's the thing. This isn't the end. This is the beginning. Because what we're witnessing isn't just a bull market in precious metals. We're witnessing the early stages of a monetary reset, a restructuring of how the global financial system works. And in that restructuring, gold and silver aren't just going to be good investments. They're going to be essential holdings. Think about what money really is. It's a store of value, a medium of exchange, a unit of account. For something to be good money, it needs to be scarce, durable, divisible, and accepted. Fiat currencies are failing on the scarcity test. They're being printed without limit. The dollar, the euro, the yen, the pound, all of them are being devalued in real time. Gold and silver pass every test. They're scarce. They're durable. They're divisible. And increasingly, they're being accepted again as real money. Russia's already using gold for trade settlement. China's been building a gold-backed system for years. Even some U.S. states are starting to recognize gold and silver as legal tender again. The pieces are moving. The system is shifting. And the people who recognize it early are going to be the ones who benefit most. Now, I know some of you are thinking, but what about the government? Won't they just confiscate gold like they did in 1933? It's a fair question. And here's my answer. In 1933, the U.S. was on a gold standard. The government needed gold to back the currency. That's why they confiscated it. They needed it for the system to work. Today, we're not on a gold standard. The government doesn't need your gold. They can print as much currency as they want without it. What they need is for you to keep believing in the dollar. And confiscating gold would destroy that belief overnight. It would be an admission that the system is broken. Could it happen? Sure, anything's possible. But it's far less likely than people fear, and even if it did, there are ways to protect yourself, holding silver instead of gold, holding gold outside the country, holding mining stocks instead of physical metal. But I don't think it's going to happen, because the government has a much easier tool. Inflation. They don't need to confiscate your gold. They just need to devalue the dollar. And they're already doing that. So while everyone's worried about confiscation, the real theft is happening right now through inflation. Your dollars are losing purchasing power every single day. That's why gold and silver matter. Not because they're going to make you rich overnight, but because they preserve your purchasing power while everything else is being devalued. And right now, with gold at $4,420 and silver at $69.44, the market is finally recognizing that. The stackers who've been accumulating for years, who've been laughed at by their friends, who've been told they're crazy for buying barbarous relics, they're being vindicated. Because while everyone else was chasing returns in a rigged system, stackers were building real wealth, tangible wealth, wealth that doesn't depend on a government's promise or a bank's solvency. And now, as the system shows its cracks, as the monetary experiment fails, as the reset begins, that real wealth is going to matter more than ever. So if you've been stacking, enjoy this moment. You earned it. You were right when everyone said you were wrong. But don't get complacent, because this is just the beginning. Keep stacking, keep accumulating, keep building your position, because the next phase is going to be even more dramatic than this one. The central banks know it. The smart money knows it. And now, hopefully, you know it too. This is the moment every stacker waited for. The moment when the world finally wakes up to what's really happening. And if you're not stacking yet, if you're just now realizing what's going on, it's not too late. It's never too late to start protecting yourself. But the window is closing. The prices are rising. The availability is decreasing. The urgency is increasing. So the question is, what are you going to do about it? Are you going to keep trusting a system that's failing? Or are you going to take control of your own financial future? The choice is yours. But the opportunity is now, because moments like this don't come often. And when they do, they don't last long. This is your moment. This is the Stacker's moment. Enjoy it. You've earned it.